Welcome, everyone. Thank you for coming to this latest installment of the How Good Innovation Series. I'm really looking forward to the next 45 minutes of discussion. As a way of introducing one another, if our audience members would like to put their name and where they're based, if you'd like, you can put your role or the company that you work for into the chat, and that way we can all get to know each other a little bit. My name is Leah Wolf. I am currently in Brooklyn, New York. It's a beautiful day here. And I'm the head of regenerative education and content here at How Good. I am thrilled to be joined by our two panelists today. Today, we're going to be talking to Matt Rusk, who is the head of GRI North America, and Sara Rowland, who is the ESG Advisory Services Lead at Antea Group. We are going to be discussing how double materiality frameworks can help companies understand the full environmental and social impacts of their products, make informed decisions to reduce those impacts, and provide transparency to consumers all at once. So just to do a quick run through of our agenda for today, we'll finish up our introduction. We're going to have about 40 minutes of conversation with our panelists. And as we continue with our discussion today, I'd like to invite the audience to put any questions that you might have for our panelists into the chat. And I will do my best to get to them and relay them to our panel. But before we get into it, I'd like to draw your attention to our upcoming session as well. On April 25th, we'll be joined by Amar James, who is a deputy portfolio manager at Van Eck, and Dan Altschuler, who is the managing partner at Unovis Asset Management. I hope that you can join us for what is sure to be a very enlightening session about investing in a sustainable future when it comes to food and agriculture. You can sign up for this and all future innovation series on our website at howgood.com/innovation-series. And my colleague Kate will put that into the chat as well. And even if you are not sure if you can attend the session, it's worth signing up for it just because that way we can send you the recording afterward. And so with that, I am going to stop my screen share and say a very warm welcome to our two panelists, Sara and Matt. Thank you for being with us today. I'd love to give you both the chance to introduce yourselves briefly. If you want to talk a little bit about your background, how you came to work at your organization, and sort of your sustainability path at large. Sara, if you'd like to get us started.
Sure. Hi, everyone. I'm Sara Rowland. I'm based in Berkeley, California, where I work from home. I'm originally from New York City, actually, and knew that I wanted to work in corporate sustainability since about sophomore year of high school. So I have been very focused and would definitely consider myself a nerd on the topic of corporate sustainability. I've worked with and attended sustainable brands events for a long time, and then was on the sustainability team at General Mills for 4 years. I started there by working on our natural and organic division, and Annie's in particular, where we had a really strong focus on regenerative agriculture and got to learn a lot more about the supply chain and really diving into multiple tiers of the supply chain through that work. My last year at General Mills, I worked both on how to integrate sustainability metrics into the R&D process and the sourcing process, and also on developing a global human rights strategy, which introduced me to the UN Guiding Principles on Business and Human Rights and gave me a new lens with which to look at impacts on people and the planet. From there, I joined Antea Group about a little over a year ago and just started leading our ESG advisory services in January. So my role here now is when companies come to us and say they want to either develop or level up their sustainability or ESG strategy, we take them through a 7-step process that helps them do that and figure out where to prioritize and how to develop a strategy that provides value both to their company and organization, helps them feel like they're being efficient and having the biggest positive impact possible, and also takes into consideration all of the range of stakeholders that they might be intentionally or unintentionally impacting. So my focus is very big on not only considering those vocal stakeholders like your investors or shareholders or people who have direct access to communicate with a company, but also the stakeholders that don't have that direct voice, who may be workers in the value chain, multiple tiers down the line, or who just don't have that visibility or megaphone to be able to communicate what they're experiencing.
Wow, so cool. Thank you so much. Matt, take it away.
Yeah, great to hear Sarah's story. Hello, everyone. Great to have your time and attention today. Thanks for the invite. I'm Matt Rusk, head up GRI North America here, leading our presence in the US and Canada, and doing all of our different stakeholder engagement, both for organizations that use our standards or want to use our standards, and those that use the data that drive come from the use of our standards. I'll touch upon that, of course, a little bit later. As far as my entry into this sustainability space, prior to GRI, about a little over 10 years working in sustainability. I had a business educational background, but I had one of those jobs that kind of changed the trajectory of my focus, which was a film in the entertainment industry trying to be more environmentally friendly. Didn't know how to do that, but they had a plot line, so we looked at what needed to be done, and was really hit with the reality that we need to change many of our different operations in many different industries. Luckily was exposed to an early presentation from B Lab. I saw that B Lab was presented here, and the power of business for good, and in an effort to do that, actually ended up working in the entertainment industry, liaisoning between the corporates and their corporate commitments and on their film sets. So really try to bring that operationally down, try to benchmark what really was a focus on environment. So benchmark that environmental footprint, try to build upon best practices, work with a couple of different studios in that capacity and some trade groups. Really learned how to talk the sustainability language to a lot of different folks in different departments of different leanings and different ways of work. So that was kind of an interesting aspect to it. Then was able to join Swarovski and be on the corporate sustainability side of things, and work on sustainability strategy, program and project implementation, and reporting for our B2B and B2C aspects of things, and got to see what sustainability means to several different industries that we dealt with at Swarovski. Consulted a little bit but after that, and then got to join GRI, which is, if you're not familiar with us, the most widely used sustainability standards are the GRI standards. They're used by over 11,000 organizations and really speak to organizations' impact outward on the world, the economy, environment, and society. It really boils down to enabling more transparency and accountability on the side of the organizations, relevant to corporates, but also other organizations of all sizes, types, and geographies, to provide information to enable all stakeholders to make informed decisions in their interest, in the interest of sustainable development, so that they can kind of decide how they're interacting with the organizations, whether they want to work for them, buy from them, welcome them to their communities or not, if they need to be regulated, so on and so forth. So like I said, lead our stakeholder engagement in the region here, help make sure in the evolution of ESG and sustainability, we don't lose that sight on the impact out component of reporting and transparency. And also want to make sure that organizations are aware of that our standards are free public good, but also some of the resources that we provide that also help the reporting process, like our GRI Academy, GRI community, of which Antea is in, and make sure we help kind of get organizations through the reporting process, but that not be the ends, that be the means to some really key actions.
Absolutely. And it's really striking me, listening to both of your backgrounds and the work that you're doing currently, that this work is varied and complex. And so I think it would be useful if we did some level setting just to start out. Sarah, do you want to take us through, for anyone who's not familiar on the call, maybe talk a little bit about what is a materiality assessment to begin with, and how is that different from double materiality, and where might all this fit into this concept of true cost accounting?
That is a great question, and definitely not an easy one to answer in just a couple of bullet points. So in essence, a materiality assessment, which can be done from a financial perspective, and has been done within financial accounting in the past, or for many years, and can also be done from a sustainability perspective, is the act of identifying those topics that are most important for a company to report on for its stakeholders. There are a couple of ways that the definition of materiality has been expanded in recent years, and I'll let Matt talk about how GRI specifically changed its actual written definition of materiality in its latest published standards, which I think has had huge impacts. But one aspect is looking not only at near-term financially material impacts, or those things that a company should disclose based on what is going to impact their share price next quarter, but rather looking at a longer term lens and looking at a range of risks beyond just share price, and stakeholders beyond just shareholders. So when we do a materiality assessment from a sustainability perspective, and especially a double materiality assessment, we're looking at those ESG, or environmental, social, and governance topics, which either may have an impact on the company, whether that's because there's some sort of direct financial impact or indirect financial impact from a reputational or supply continuity risk issue, or a topic where the company has an impact on the outside world. So both looking from outside in and inside out, just like Matt was describing. The way that you actually assess materiality, especially that impact materiality lens, is pretty nuanced, complicated, and also a little bit newer. In the past, many materiality assessments have relied upon engaging stakeholders in surveys and interviews, but it's really important to remember that the stakeholders that you have access to interview don't necessarily represent the full range of people that you may be impacting. And so what is important to move forward with in the future is engaging either experts or proxies, so people who can represent those people who are most effective but don't have a seat at the table, like farmers or indigenous landowners or any sort of community that might be impacted, and understanding how the company may have a short or long-term impact on those communities and what the company should do in order to minimize, remediate, and improve its ultimate impact. And these principles are really guided by the UN Guiding Principles on Business and Human Rights, which often seem like a very technical long document that might not be worthwhile reading in depth, but I would argue otherwise, because I feel that once I understood the UN Guiding Principles, this whole world of sustainability disclosures made a lot more sense. And I think there's a thread that I also want to share that kind of goes through all of this. We've started at financial specific reporting, which defined materiality as topics that are important for shareholders to know in order to make an investment decision. But there have been several topics that have emerged over the last 150 or so years, starting with the understanding of the tragedy of the commons. I did some nerdy research on this to understand like where these terms came from. So I'll share a little bit about that real quick. So the concept of the tragedy of the commons was described in the 1830s. Of course, I'm sure it was understood way before then by indigenous communities, but of course, we'll just start with the 1830s for now. And then really, moving on to this, like Fred Kirschman, who described the fact that the price that we pay for groceries at the store is not necessarily representing the actual price of that food, and that the actual price of food actually has those externalities, or is the cost of externalities that we pay for elsewhere, like the cost of cleaning up polluted waterways, higher healthcare costs, or taxes to support social services for workers who can't, who aren't being paid adequately. And so that's really where the concept of true cost accounting in the food industry arose from. Then we had additional concepts layered on top of that, like triple bottom line, or natural capital, or stakeholder capitalism, which have all contributed to this discussion. And ultimately, what's really exciting is that we're transforming the way that companies report on financial metrics to include those externalities now. And that's really what GRI is helping influence, and what the Corporate Sustainability Reporting Directive coming out of the EU is now going to require as a law.
Wow, thank you so much for providing that a little bit of historical context. I think that so much of what we're going to be talking about in our discussion today is about context, right? And nothing exists in a vacuum. And so having that little bit of a sense of place is so helpful in kind of setting the tone for this discussion. Matt, I know that GRI has been around since I think 1997 at this point. And so I'm sure there's been a lot of evolution that's happened. And I know that there's even been a recent update in the standards. But I'd love if you could start by just briefly describing the GRI standards, how they might be applied for maybe a food or an agricultural company that's in our, in our audience today.
Yeah, thanks. That's great history, Sarah. Background. So GRI standards, last year celebrated 25 years. It was a reaction, the creation of the initiative that was out of series, nonprofit series to start, was in reaction to the Exxon Valdez oil spill, and realizing that investors and environmentalists came together to say we need a lot more transparency on corporate activity so we can all make informed decisions and understand the risks and opportunities that there are with interacting with these different organizations. And that's true of internal and external stakeholders to help make more informed decisions about the impacts on the world. So started really with years of guidance on how organizations can get there, really helping the organizations be more transparent and in turn accountable, because then all the stakeholders can hold them to account for their impacts. And in 2016 became a proper standard setter, if you will. So a lot more governance and prescribed aspects to what are asked to be reported on, and this does include environmental, economic, and social impacts and impacts on humans, people. And then we've just had the cited update we had an update to our universal standards and our module system for these standards. So when you think about the GRI standards, you have now 3 buckets, if you will. You have the general universal standards. GRI 1 is always the great starting point. There's no disclosures related to it. It really just describes how to use the standards in the several different ways that you can. That's in accordance and reference to. We maybe be able to touch upon that. But one in accordance is using them in their full intended way, and now that incorporates a need to embed the reporting on human rights sector standards that help prescribe a bit more of what a particular sector needs to report on to be in accordance to the standards, and then topic standards, where the sector standards actually cite the topic standards. The topic standards have been around since 2016. So we're not reinventing the wheel here. We're just trying to find a mechanism to be more consistent and comparable. We're excited because one of the reasons here today is agriculture, aquaculture, and fishing is a sector standard. So very relevant to the food sector and some of the great work that How Good does to make some of that data accessible and useful to different stakeholder groups. Some of the other changes that took place, so they were the standards. If you see our standards, they have the year next to them of when they were created or updated. So the latest are the ones that say 2021. So whenever we produce a new standard, it goes through a rigorous due diligence process. And then we kind of give a year reporting cycle for organizations to kind of get acclimated to the updates. So the newest ones embed human rights. Human rights was being a bit underreported, and we see that as a material topic for all organizations. So we wanted to make sure that was incorporated. This is in alignment with some of the UN guiding principles already cited and OECD due diligence. So you can also think of the standards as really aggregating what works in protocols. We are ourselves not trying to reinvent the wheel, but really bring everything together to create a global common language for impact reporting that is relevant to organizations of all sectors, and all sizes and all geographies. Because with that, if we bring that together, one, we can hopefully get past the reporting into the action. But two, then all the stakeholders can get accustomed to how we speak about these impactful topics. What metrics should we look at? And it has a narrative aspect where you can explain what you're doing to mitigate your water impact or your impact on the environment, or speak to your positive impact in those areas. We also increased the reporting on governance. We're clearly seeing a lot of focus on ESG, so bolster that in our update as well. And simplified our in accordance and in reference to aspects for the reporting to streamline some of the reporting, and a little bit of the update that Sarah referenced when we have a bit more guidance on how to identify material topics to report on. We see this assessment of stakeholder engagement and identifying your biggest likely and actual impacts as an ongoing endeavor for an organization. And it really is a good management system. We hear that all the time about using the GRI standards. Some of you may be accustomed to a materiality matrix, what's important to you, your business, what's important to your stakeholders, and identifying the key areas to report on via that process. Now we've prescribed a little bit different of a process, that ongoing assessment of your likely and actual impacts and stakeholder engagement. But we want to ensure that the organization reports on the areas that really produce the most impact or could, so likely impacts on economic, social, and environmental items. So there is a call out to really engage with internal and external experts to really zero in on where your biggest impacts could be. So there's a slight adjustment there in this ongoing process, in the embedding of human rights, in the incorporation of the sector standards, and a bit of that different guidance and definition of your material topics. And the last check is check with the external and internal experts, and check with your stakeholders so that it will in fact speak to your likely and actual impacts and help to be decision useful to the stakeholders that you're trying to appease by going through this reporting and transparency process.
Thank you so much for taking us through that. That's very enlightening. And at what level of expertise, I'm curious, is needed to use this GRI reporting framework? Is it geared toward sustainability professionals, or can anybody within an organization take it on? Like I use TurboTax every year. Like, am I qualified to do to use the GRI framework?
Well, you'll get an answer based upon a different answer based upon who you ask. But we absolutely see great consultants and service providers like Antea helping organizations go through this process. I've also been amazed, some big retailers that we would all recognize, their legal department kind of just picked up, one person in their legal department picked up the standards, read GRI 1, and went and produced their first report. That was to the old standards. She just updated to the new one. So we do try to make them accessible to all. Now, when you press download on the GRI standards and they all come together, I think you're hit with a page count of 600 or something. It is an intimidating page count. There is a ridiculous amount of redundancy in there because of that module approach, though. Every single one. So a topic standard 305 is biodiversity, emissions, 304 biodiversity. They all can also be used, and this is when you get in reference to GRI reporting. You can just use that one topic standard to report. If you have a stakeholder group saying, hey, how do you manage your biodiversity impact, these key disclosures, you could just report to 304. So in that, there's an intro to that, how to use it. There's a glossary. There's a lot of guidance. So the standards themselves, there's a lot of redundancy because of that module approach. And GRI 1, like I said, there's no disclosures there. That's just explaining how to use it. So if you're just entering into this, it looks like a Herculean feat to just get your head around the standards and then starting the reporting process. But especially to date, we've gotten to that over 11,000 organizations using the standards because we have been in this voluntary environment. So it's given the space for a little bit of mistakes here and there. Now we have a lot more stakeholders asking for it. There's assurance that have been asked for it and done, just determined to be done by organizations even before requirements. We are seeing requirements coming, so it's going to have to be professionalized. But there's absolutely, we've seen organizations with no experience prior go ahead and tackle it. Do try to scale up either with their own internal expertise and grow a team to help them do that. Leverage consultants or service providers. We're also seeing a lot of real great interest in our GRI community and our academy, which gives a pathway to a professional certification. And we see, because of the professionalization of sustainability reporting and these incoming regulations and elevated stakeholder expectations and the regulations, we overlap highly with CSRD, and the new European sustainability reporting standards. We can maybe touch upon that if time permitting. So we see a lot of pivots. So people that were in the financial function going and helping with sustainability reporting, legal teams, the communication teams, procurement, environment, health, and safety. So a lot of these courses that we have or certification really help pivot folks to be able to start tackling sustainability reporting, because a lot of this data, a lot of this information is already being captured by different departments. It's just a matter of recognizing that this is a key piece that should be part of an impact or sustainability report to get accessible and out there in front of other stakeholder groups.
Right. And Sarah, obviously, speaking of external assistance when it comes to this type of reporting and ESG consulting, this is exactly the kind of work that you're doing for Antea Group. And so I'd be interested to hear, what kind of strategies you're using at Antea Group. Are you using technology partners or data partners to kind of accelerate that work or enrich some of the climate deliverables that you might be working on for clients or an organization of your type might be working on?
Yeah, so we do have some clients who choose to use data partners, and I think it kind of goes both ways. The drawback of using a data platform for gathering this data is that it may be accessible to fewer people. So people may need to learn how to use a new technology platform or get a new login or, something like that. However, this data, there are a lot of data points obviously involved in a GRI report or a CSRD, EU CSRD report. And so it's important to have a management system for that. At the moment, I would say our approach is a bit hybrid and very dependent on how the organization already functions. If there is a way to integrate into a system that the company, that our client already has in place, then our recommendation is typically to integrate into a system that they have, so that they're not looking at sustainability metrics in a silo or separately, but rather they're looking at them right alongside the financial metrics. As far as greenhouse gas accounting, I think it's kind of a similar thing. You want to make sure that your data is auditable, clear, transparent, and you understand how everything is being calculated. And for that reason, a lot of it can be done in Excel, but it really does depend on the size of the company and organization, and also the other tools that the company is using, as well as their technological advancement. I know we're not supposed to be plugging tools during this, but the How Good database is a really good example of a tool that allows companies to look at environmental and social impact metrics alongside financial metrics, or within the same sort of system that they would be using for a procurement process. So yeah, that's typically my recommendation.
Wonderful. Yeah, typically we try not to promote too much, but I will allow that one promotion. Yes. So you briefly touched on CSRD. Matt, you were just mentioning it, and I'd love to make sure we have time to talk a little bit about it. So I'm going to ask you, GRI did updated standards in January of this year, and I'd love for you to talk a little bit about the reasoning behind those changes and how they're influenced specifically by CSRD and vice versa. If there's anything that's going on with GRI in industry groups to help try to influence some of the regulatory changes that we're seeing in terms of sustainability and financial reporting.
Yeah, so let me go ahead and tackle a little bit of CSRD and what we're seeing with kind of the corporate reporting landscape, and then I'll quickly maybe touch upon the updates or how they affected. Because really, I think we ended up kind of at the same place with CSRD and our standards because of looking around with the elevated understanding of impacts and interrelation to environmental, social, and economic impacts. That we both simultaneously, us and the regulators at the EU, realized what was needed in the progression of transparency and accountability from corporate. So because of the regulation out of the EU with the directive CSRD to report, the big difference there is on double materiality, touched upon a little bit. And that really, we like to think of it as a two-pillar system. And it's a combination of what's happening out of Europe, but also what we're seeing elsewhere with that focus on that financial materiality side of things. So you have the one pillar that is strength in financial reporting. So it's an additive to what has been traditionally reported by publicly traded organizations under their financial disclosures through GAAP and IFRS standards. And now there is a layer of ESG factors. How do they impact your business? Really with the mindset of accommodating investors in capital markets to provide them with decision useful information. The impact pillar is the other one. So the two of them together create two pillars, double materiality, two perspectives on materiality, a couple different ways to say it. And that is where CSRD and their new European Sustainability Reporting standards, the European Sustainability Reporting Standards, I'll make sure I get it right, they cover both pillars. Now that impact reporting pillar, they had been the organization that helps create or verify the standards that the EU will use, EFRAG, wanted to not reinvent the wheel and needed to bring in expertise on impact reporting standards, and the governance needed to do that. So we were brought in as a co-constructor, which of course we welcome, because our goal is also to create a global common language for impact reporting. So we will advocate all over the world, please don't reinvent something. Let's work together to make sure we're appropriately aggregating to create that common language. And what we've already done, and I'm impressed by our standards team every day that has a firewall between us and them, but really that process to come up with these standards, that is challenging work. We do not need to keep reinventing that. We need to make sure we get to the action. So the impact reporting pillar is where GRI has always sat, covering environmental, economic, and social impacts of the organization outward. So those the CSRD will now affect over 50,000 organizations. It is an EU directive, but this will have global ramifications, and organizations headquartered elsewhere but having subsidiaries in the EU of that are large businesses, but the thresholds are rather low. 250 and three of these, 250 employees, 40 million in revenue or 20 million in assets, those are annually, will be pulled into having to report on the European Sustainability Reporting Standards. Now, the good news about that is those that are already accustomed to GRI, there is a high level, it's maximized overlap with that impact reporting pillar with CSRD. So if you've already been a GRI reporter, you have been preparing for this. If you are still need to get to the place to be prepared for these new mandates, GRI standards that are still voluntary and globally applicable are a good pathway to go to scale up your reporting process. And so I think that covers most of it, although we will say the other key component, because of that impact pillar and our standards really focusing on multi-stakeholder groups. Those stakeholder groups run the gamut. It does include investors. Investors care about some of those financial materiality aspects, of course, but also impact out. So that we also see a through line from, if you identify your likely and actual impacts on the world, that is bound to hit your bottom line. So it's a good exercise from a good for business standpoint, of course, because over the long term, if you are exploiting people or planet, this is going to hit your bottom line, whether it's new regulations like some of these, reputational hit, the inability to recruit and retain talent. We just heard a bunch of that at a conference I just came from. Certainly customers are demanding it more as well. And as far as our updates of how it factored in from theirs to ours, it kind of was a natural progression. I think we both identify the need to embed human rights in disclosures, aligned with other intergovernment authoritative instruments out of the OECD and UN guiding principles to once again not reinvent things. Now we are rolling out these sector standards. They currently have paused their sector standard program. We will work to coordinate the rollout of that as they do that. And the other thing I have not yet mentioned, that financial reporting pillar where TCFD sits and ISSB is, to throw out some alphabet soup here, we are working very closely to make sure there's complementality between those two pillars and interoperability. A greenhouse gas is a greenhouse gas, whether you're reporting on it because it's financially material to you and it's scope 1 through 3, or you're reporting on it because you want to speak to your impact out, it's the same disclosure. So if you're already a reporter, you're very accustomed to, the GRI index will put you to page 11 for that information. The SASB index will point you to 11 for that information. And that is something we are working on, once again, to get beyond or lighten the reporting burden and having reporting be a means to an end, not the end. So that is something where we adamantly continue to work on collaborations in this space to help reporters and report users as best we can.
Yeah, certainly. And I think that something that we hear from our clients, from people within the How Good Network, is as we're seeing this time of economic uncertainty and sustainability teams are getting squeezed, they're, even further under-resourced. And so I think it's really important that we kind of look at ways that we can make it as easy as possible. So it's really cool to hear that that's something you guys are thinking about as well. So continuing to kind of look toward the future, Sarah, I'd like to get a little bit of your perspective about how these incoming regulations, but also maybe consumer demand and supply system resiliency might influence the next decade of food company for food companies and CPGs in terms of true cost accounting and double materiality.
Yeah, it's a great question. I think, I want to emphasize something that Matt shared about the extent to which CSRD is going to have an impact on global companies. So Matt mentioned at the beginning that 11,000 or so companies have adopted the GRI standards. That's huge. That seems like a lot of companies, right? That's amazing. And GRI is very robust. And so the fact that 11,000 companies have adopted them and are reporting on sustainability metrics in alignment with that is great. What we're hearing now around EU CSRD is that it's going to apply to 49,000 or almost 50,000 is the estimate companies. That means that, like, basically overnight or over the next realistically 2 to 3 years, 5 times as many companies are now going to be required to assess materiality, both impact and financial materiality. So assess double materiality is required in the CSRD framework. Report on governance, strategy, impacts, risks, and opportunities, and metrics and targets on basically every material topic, so environmental, social, and governance topics. And this report is going to have to be audited. So now it's really elevating the level of ESG reporting to the level of financial reporting that has existed in the past. And if almost 50,000 companies are going to be required to do this, both those headquartered in the EU or having operations in the EU, and the CSRD reporting requirements require a company to look at the impacts of their value chain, then that is going to touch, by my understanding, like the vast majority of companies in the world, because those 50,000 companies rely on how many, millions probably of other companies in the world. And they're going to have to ask these similar questions of their value chain. And it's not just supply chain or their direct suppliers, but it's any level of relationship, whether it's their, looking down into the supply chain tier 3, 4, 5, or their customers, things like that. So the ripple effects that I think we're going to see from CSRD are hard to emphasize enough. And I personally think that is going to have the biggest impact on the business landscape in the next few years. And I'm really excited, honestly, that the standard is so robust and has been influenced by GRI as well as UN guiding principles, and that it really seems like we're finally getting to a point where there's a convergence of all of these reporting standards. And whether or not the US decides to adopt a similar standard, honestly, it's not really going to matter that much, because all of the multinational companies that want to do any business in the EU or interact with any of these 50,000 companies are going to now have this common framework. So I personally think CSRD is going to be the thing that has the biggest ripple effects, and requiring companies to start asking these questions of what are the potential and actual impacts of your value chain, and then having that information be audited and held to the level of assurance that we look at financial data on is going to, really bring the conversation to a new level.
Wow, thank you so much for that. Yeah, I actually, my focus in grad school was food policy. And I think often it's easy to feel like international regulations don't have any teeth, and especially ones that are so forward focused and progressive that are coming out of Europe, where sometimes it can feel like here in the US, well, yeah, but we'll never have anything like that here. But to hear you talk about it in those terms is really inspiring. And I just want to echo your sentiment that it's so exciting that this is gonna spark some real material change in the coming decade. So we're down to just a few minutes left. I can't believe how quickly our time has gone. And so I just want to give each of you the opportunity to maybe give our audience something to walk away with, just as one thought to walk away with. Maybe it's someone who is thinking about sustainability reporting, but they're a little bit overwhelmed or they're a little bit under-resourced. What would be one thing you would say to that person to encourage them to maybe get started or advocate a little bit for some sustainability reporting? Matt, do you want to start?
Sure, but I'm going to cheat right off the bat and say I'll add. Sarah did a great job really contextualizing things. In 2028, also, if you have revenue over 150 million euro in the EU, whether you have a presence there or not, you will have to report on the impact, is what the plan is right now. So yes, globally, you will be pulled in the coming years. Where to start? How good I know that with a focus on food, the sector standards are really exciting to me because it not only helps create more consistency across the sector for reporting, it gives you a bump up as you try to navigate your materiality assessment, because it's a likely material topics and the mechanisms say you need to report on this or give a reason why you can report on this. And maybe it's not applicable for you. Maybe you don't have the data, or there's 4 options there for omissions. But it really helps you start thinking, what are our likely material topics as an organization in this space? And then, so I'd say the standards really offer a lot of help to get on the path there, whether it's a sector standard, if you have one for your sector already, or GRI one that explains how to use it. And then, of course, you need to start today or yesterday. And so the fact that you can, right now, we are still in a moment where you can begin, and there is a bit of runway to just start. They love to say it in our sustainability space, don't let the perfect be the enemy of the good. You need to start and really start this process. It's good for you. It's good for your stakeholders. It's good for your business. Just start the process.
Well said.
Oh man, it's hard to pick just one resource because I am just so deeply passionate about this topic and find so many different things to be interesting to look at. So I'll cheat and I'll do 2 things that I would, or maybe 3. Okay, 3 things. One would be the UN Global Compact has some great videos in their academy about the UN guiding principles for business and human rights, and I can't overstate enough how many times I've seen our clients have that aha moment when they realize, oh, this is where all that kind of odd language is coming from in these standards. So like Matt and I both referenced multiple times, actual or potential impacts, that comes directly from the UN guiding principles. And once you understand the UNGPs, you're going to see them everywhere. So I really think that helps with that aha moment. The second one would be, I know it's long, but actually reading CSRD. The whole thing is over 600 pages, but even if you read the intro, you will at least get a flavor for it. And they're working papers. They're a little hard to find, so I'll try to post today a direct link to the working papers, because they actually have, EFRAG has a working paper on double materiality that actually has a guide of how to do double materiality. And it's unbelievably difficult to find online. You can't Google it. So I'll post it on LinkedIn. And then the third thing would be just start asking questions inquisitively within your company. So you could do some scenario planning in a sense. What would happen if we were required or if we were asked to share our potential impacts on Indigenous communities or on, pick an impact area and start asking that of your colleagues and see where you get in a more exploratory way rather than a accusatory or pressure driven way. Because once we get to the point where this is required and we are feeling time pressure, it's going to be a little bit harder for it to be like a positive thing that we get to explore. So if you can start the conversation in a positive way, where you get to identify potential positive impacts you might have on the planet and people, that can help frame things in a good light to set you up well for those discussions in the future.
Oh, amazing. Yeah, what a great way to get started. I really appreciate both of your time and coming together and just sharing your knowledge and your perspective with us has been beyond valuable. So thank you so much. Thank you to our audience. I hope I see you at our next innovation series. And obviously find and follow Sara and Matt on LinkedIn. You can find me there as well. And that way we'll all stay connected and be updated about what we're all doing in the future. So with that, I'll say thanks again and see you next time.
Thanks for having us.
Thank you.